Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Recording in progress.
Hey everyone, welcome to Stocks Never Trading. My name is Ron, my partner is Dave. Thank you guys for joining. It's Thursday evening, 7 p.m. Eastern, and it is September 26th. Next week, guys, I believe we're going to be starting October. Let's just take a look at the calendar here. Yes, Tuesday will be October 1st, so we have to be very careful trading on Monday because that will be month end. That will be September 30th, and then Tuesday we got a new month, new candle. So a lot of funny things happen month end, and some funny things happen when new monthly candles open up. So Monday, Tuesday of next week should be really interesting, and we're also going to be wrapping up these Tokyo sessions for a little bit, and the next couple weeks we're going to be moving into our post live New York sessions at 11 a.m. Eastern. So please, guys, I want you guys, everything that you've learned in these late night Asian sessions, all the education we provide, we're going to put it to work in the live markets in New York, and you will see how everything moves and operates in a fast-paced moving markets. And we'll have some new things that we'll be doing for you guys for those posts in New York. So I got some ideas that I want to do. One day, I've never done it before, will be kind of like a chart surfing day where we can go into the markets for 3-4 hours, and you guys just tell me what you guys want me to chart and analyze with you, and I'll set up everything for you. We can watch it, we can trade it, and then once one chart is done, you guys list another one, and we keep going. If you're in a trade, I can help you out. I can give my bias, my opinion of what's going on in the markets, and kind of like Sunday, you know, when football is on, and then you got your red zone. It's kind of like the games are just flip-flopping from each game, and getting some analysis on the games and things like that. So I kind of want to mimic that in the markets with charts, and you guys can give me anything, and then we'll do a nice thorough top-down analysis a little bit faster, and then we'll get our point of interest areas on a higher time frame. We'll get our point of controls. We'll look for all kinds of things that we look at. Okay, so I think it's going to be really fun and interesting. I've never done it before, and I love new things. Okay, so tonight, guys, we're gonna go for 90 minutes. I keep saying that all week, and we go for 2 hours, 2.5 hours, 3 hours. But tonight, I have to be very disciplined with the time. As you guys are getting better with your discipline in trading and risk management, Ron needs to get more disciplined with time management. So at 8:30 p.m., it's the Cowboys game, Dallas Cowboys against the Giants, and I'm going to meet some buddies out to go watch the game. So I got to be pretty disciplined with that. So what we're going to do tonight is review the markets, review the news. We had a lot of news today. GDP came out for the US. Also 9:20 a.m. Eastern, Powell was speaking at the and everything that happens today, we're going to look at the specific times, and we'll see how Powell he kind of was a party pooper and didn't allow the markets to go to the all-time highs and even higher. He kind of cooled it down, but we'll see how they're going to move. And what we did last night was a 4-hour setup on Nasdaq, and also I want to talk about that 5-minute fair value gap and how it played out after the call. So did anyone take some buys after the call? If you were on the call with us yesterday, right after we ended the call, I kind of mapped out the pending orders where the buyers were, and we see how it played out. It kind of double bottomed there with some liquidity that it grabbed, and it continued to go through making those highs. So we're going to talk all about that. Okay, guys, everyone on Zoom, thank you guys for joining. I appreciate all of you guys. I know you guys are very, very shy, but you don't need to be shy. I don't bite. Be active, be interactive in these sessions. You're going to get more out of it if you are more interactive. Okay, so welcome, guys. Ferdinand, welcome. Kenny, my man, welcome. Thank you for joining. Zanetta, thank you for joining. I appreciate you. Thuzma, thank you for joining. And everyone on YouTube as well, I appreciate all of you guys. Tony Gold, my man, always first one, yeah, always. Tony, I got so much respect for you. You put so much work into your trading, and I hope everything is working out for you. I know you very well because you're always the first one here, and you're always engaged, and you're always learning. And I'm just reading what you wrote here. Mashallah, my best day trading ever. It's really clicking. Perfect. That's what I want to hear, guys. When things are clicking, is just you know what you're doing. Just now, Tony, start to perfect the craft. Okay, start to finesse it now. This is where you're gonna find exactly what you're looking for. It's gonna start becoming really automatic, and you're gonna start to see consistent results over time. Yes, you're gonna take some losses from time to time. It's natural, but don't allow those losses to destroy everything you've worked for. That's what we want to do. Small losses, and let your bigger trades start running and start compounding and accumulating that account. Okay, and if it's a small account, that's fine. If it's a mid-size account, or if it's a large account, whatever it is. Remember, we work in percentages or pips or ticks or points, whatever it is. When we don't talk about dollar amounts here or dollar figures. Okay, the language of trading is ticks, pips, and pancakes. That's what we talk about. So Tony, congratulations, brother. All the best success, and I hope that you continue to learn with us, and I will be here every single day to help you out. Any questions you have, Tony, ask. Okay, don't be shy either. Erica, welcome. Thank you for joining. Three Paws, welcome. Thank you, guys. Tony, yeah, I love it. This education will change your life, and believe and have patience. Yes, for everybody. Just have patience, have discipline in your learning, and yeah, when it starts to click in, trading can definitely help change your life for the better. For all aspects of life, not just with trading or like financials, everything. It teach you discipline in the markets, which can translate into your everyday life and teach you discipline. So it really does help, guys, and have clear goals, what you want out of these markets. Kenny, my man, you're also on YouTube. I love it. Thank you, bro. Yes, smash the like, guys, if you're serious about Forex education. We're very serious about educating, so I hope you guys are very serious about your learning. Okay, guys, thank you. DJ T-Bands, Nels, welcome. You're a member. I'm on YouTube today. Welcome. Thank you, bro. YouTube or Zoom, wherever you are at, we're always here for you. Thank you, guys. Okay, so let's get started because we're limited for time here, and you guys know me. I can talk a lot and forget all about time management. That's what I'll be working on. I'll be working on learning discipline with time, while you guys are learning discipline in trading and risk management. Okay, so Ron will get better with time management. But let's get started right here. And guys, at the last 10-15 minutes, okay, I've got a little thing I wrote, and I want us to talk about those key points over the weekend, things to work on, everything, kind of summarize what we talked about this week. And if you guys want, go back and watch these videos. Monday, just recap. Monday was a really good webinar, guys. I'm not saying that because it was really beneficial to a lot of traders because it was talking about discipline in trading, technical discipline. So everything that we need to improve in trading was done in that webinar. Okay, and it's on YouTube, and it's going to be posted in our website as well, but it's available on YouTube for everyone to watch. So really talked about a lot about the discipline of trading. So I hope you guys learned one thing from that, and you've implemented it into your trading this week, and maybe it changed for the better. Maybe you're starting to see some improvement, or maybe it's things that you need to work on. Okay, and then Tuesday, Wednesday, we had fun in these Asian sessions. We talked about the news. We talked about point of control areas, higher time frame areas, figuring out your zones, learning your green box, red box volume can move up or down, and and then you can bring it down to lower time frames and see exactly how the lower time frames bounce off these areas. That's what I'm going to do with tonight's call, and I really want to break down Nasdaq for you guys. So this is the chart we're going to do, and I want to talk about all of the zones that we put on the charts and why we put them there and how they played out. Okay, so please guys, learn this stuff as much as you can. It's not that complicated. We simplify everything here at SST, where kids can learn this and be successful. Okay, so it's just like a video game. Learn the video game of figuring out where the support and resistance is, and the video game of green candles and red candles, and you can do very, very good. Okay. Tobago, all of these sessions are recorded, 100%, brother. All of them are recorded, and I'll get them all posted for you guys, okay? 100%. But if you do miss something, they're available on YouTube, the sessions that I do, okay? Let's get into this. Courtney, sorry. The faster you make it, the faster you lose it. Statement you made is so true. Yeah. Because the faster you make anything, you don't appreciate it as much. So the longer it takes, you know, when you're making a nice sauce for your spaghetti, like that's what I just had for supper. So that sauce, I could have made a quick sauce. I could have made one in 5-10 minutes and just boom, 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 took it out of the jar and just. But it's not the same. That's not the same sauce. My sauce tonight, I bought some nice fresh tomatoes. I don't want to give the secret recipe, okay? Because this is my recipe that's I've had for a long time. I give you the recipe for trading, but my spaghetti sauce, that's a secret, guys. I don't tell anybody that. But it was fresh tomatoes. You know, it took a while to simmer to get that thing going with the proper ingredients, the proper seasoning. It took hours, but I appreciated when I ate that. It was nice, fresh sauce. So, you know, with trading too, guys, the faster you make it and you don't understand what you did or how you made it, that's easy. You could lose it a lot faster in the markets. So the more, guys, if you're making some success in the markets, take the time to review what got you there, and it will help you appreciate tomorrow's trading. It will help you appreciate when you're trading next week, and then you can maybe start to see, okay, now I know what Ron's talking about all these years. He's talking about that trading is a long-term. We got to look at this long term. We don't look at it just for tomorrow. Tomorrow is Friday. We don't just look for Friday and that's it, or next week. Think, guys, of a longer term plan for yourselves. Think what you want out of these markets in the next 3 months, 6 months, 1 year. Where will you be in 2 years, 3 years down the road doing this? Okay, but you have to have a risk management, a plan, a routine, reviewing your losses, improvements, getting better at your technicals, getting better at your risk management, getting better at your discipline. These are all things that are part of the recipe to be a successful trader. But at the end of the day, okay, this is where I'm going to be brutally honest with everyone, okay? And that's why I hope you guys respect the fact that I'm brutally honest when it comes down to this shit. There is traders who put more time behind the scenes, reviewing, looking at their trades today, seeing what went well, what went wrong. And then there's other traders who don't do anything. Okay, and then they want all the success, but then there's a lot of traders who are putting in the work, you know. So maybe they're the ones that appreciate it more than others because they're putting in the time, they're putting in the work, and those are the ones that are going to probably be more successful down the road than other traders who are just half-assing it. Okay, and there is those guys. Okay, I'm not going to lie. So it depends. If you half-ass it and you just, you know, you don't understand what you're doing and you're just here to make some quick money, you're probably going to be a statistic, and you're probably going to be one of the ones that is failing or quits trading or loses a lot of money in the markets. Okay, and those people exist. You know, whether we want to believe it or not, 95% of retail traders fail. They fail because of lack of discipline. They fail because lack of risk management. That's why they fail. They fail because they don't understand what they're doing, and they fail because they treat this like a casino, and they don't treat it as you should, like a proper business. So But for those that are putting in the time and you guys are working on it and maybe it hasn't clicked in yet, just continue to take your time. Don't get discouraged and your time will come. Okay. Guys, I can talk all about these type of things, psychology, but tonight we really have to get through this. Okay. I'll save all this type of talk for specific psychological webinars with you guys. But that's the truth about trading, guys. You know, like I see it right now. I go on YouTube and there's a lot of these gurus and fake traders and bullshit out there, and they're getting exposed. They're getting exposed because they're using fake accounts. They're getting exposed because they don't ever live trade. They'll only post in 1 month you won't hear from them. Then all of a sudden they're going to show something like they made $10,000 and then back test and say you should have bought here and you should have done that. What I say to all those fake gurus is come live and show how you do your shit, whatever style it is. I don't give a fuck what style it is. If it's SMC, ICT, or whatever the hell it is, come and show what you do live. Okay, and describe what's going on, your psychological mindset, why you're taking a buy there, why you're selling there, and prove to people that you can do this live. We've been here for 4 or 5 years every single day. You can go back and look at all the videos, and everything that we do here is live because I believe in live education. I don't believe in you just show what you did last week and then you put a thumbnail of a Lamborghini. Come and show what you do. What I want to do is kind of like a trade wars. You know, when you go into okay guys, now you guys got me off topic. I want to do trade wars when what that is it's kind of like, you know, in a casino where you got your cherries and bananas and strawberries, you know, the slot machine, and you got to get 3 of them in a row and you get jackpot, you know, when those things are spinning. What I want to do is, like, if you guys call me out, for example, if someone calls me out and wants to trade against me, let's do it. But for everyone to have a fair playing field, the first thing that's spinning is the security. Okay, it can be any security. I don't know what it is. You don't know what it is. It can be Forex. It can be GJ. It can be Euro USD. It can be gold. It could be crude oil. It could be silver. It could be Nvidia. It could be Tesla. It could be anything. It could be soft commodities. It could go into I'll trade futures lumber contracts. I don't give a shit because I can trade anything. I've taught myself to do that where I have the confidence to trade anything. That's just securities. The next thing that we're going to spin is the time frame. So it can be scalping 1 minute. So we'll test the trader to see who's overall can just start to adapt to anything. 1 minute, 5 minute, 15 minute. It could be a 4 hour. It could be a daily. It could be a weekly swing trade. It could be anything. Okay, so I don't know the security, it will be just random. I don't know the time frame, it'll be random. The last thing could be is the type of risk management. Are we looking for a 1 to 3? Are we looking for like a quick trade with minimal to no drawdown? Are we looking for anything? You know what I mean? This is to really, really challenge anybody who is a trader and wants to do this live, because I'm down for this. I want to do this, and this really will prove to who can do this live, and then whatever the security is, whatever the time frame is, whatever the type of style is, like it doesn't matter. That's what I want to do, because I'm starting to see like so many fake people here taking people's money, and they're just bullshitting. I don't really follow too much of the YouTubers or anything like that, but now I am kind of following it, and it's kind of ruining it for the people that actually do this and really are passionate about teaching. And you know, it's wrong, guys. But anyways, don't get me started with that shit. We'll talk about that at another day. But I got some ideas, guys, how we can change the game here. Anyways, okay, so let's get into the markets now. Forex Factory, we had some news today. Okay, so Thursday was the big day this week, and I even said to you guys, if you don't plan on trading today, it's okay. Today is a very can be very volatile. There's a lot of news in the market. If you make a critical mistake, it could be costly. So what I did say was lower your risk on a day like today. unless you have the experience to trade all of this stuff. So we had our London news, we had a lot of Swiss news come out. So they did in fact have a 0.25% decrease over here. And we had our final GDP over here in the US. Okay, so it came out 3%. So no change. We had 3% previous quarter over quarter in the GDP. Their forecast was 3%, so no change. Okay, so it would have been more significant if it was like 3.1 or 2.9 if the GDP quarter over quarter increased or decreased. Could have made an actual significant move in the market, but it came out flat. We also had our weekly unemployment claims, so they came out green. Why? Because the number is lower than the forecast. 218,224. That means that 6,000 individuals individuals are applied for unemployment this week from last week. So that's good for week over week job employment numbers over here. Okay, and that does affect the U.S. dollar. It does affect the US dollar, you know what I mean? So anything you're trading will be correlated with that. But the big thing this morning was right here, okay? So we mentioned this all week, and I hope you guys understood the significance of this. This was at 9:20 a.m. Eastern this morning, 10 minutes before Wall Street. Fed Chair Powell spoke today. So I hope you guys are getting used to this. If you see this name Powell, you should know right away. A light bulb should be going off and telling you that volatility, this man can move the markets like nobody else, and you have to be very, very careful. Okay, so make sure, I don't know if today was your first day trading or what it is, but make sure you get familiar with Jerome Powell, okay? Because we will talk about how the markets moved as soon as this gentleman started to open his mouth, okay? And then we had Wall Street. We had ECB President Lagarde speaking at 9:30. That's England's central bank over here. And then we had our members speak throughout all here. We had FOMC member Williams speak today. We had Barr, we had Cook. Treasury Secretary Yellen also spoke. She was talking about a soft landing. Guys, if you didn't tune into any of this stuff, you know, that's what weekends are for. That's what review is for. Like, I know some of you guys love Netflix and chilling and shit like that, but sometimes if you listen to what these people are saying, they can help you make some money in the future in the markets. So as people think this is boring, but I'm telling you guys, this is part of our homework as traders or investors. We need to know what these people are talking about because they dictate the direction of the volume in the market. So let that sink in. You know, like I can't move the markets, you can't move the markets, we can't move the markets. These people in fact actually move the markets. Okay, so we have to know what these people are talking about and who they are and who are the more important players than the others and what these people represent. So make sure anytime you see Treasury Secretary Yellen speaking, you're dialed in and you know what's going on. Make sure anytime you see Jerome Powell, you're dialed in. You're laser focused to what this person is saying because they will dictate the way how the markets move. And when you put the pieces of the puzzle together, what we talk about here, and you understand how they engineer these moves, it's going to make so much sense to you that you guys are going to be laughing at the end of the day when you figure out how markets operate. Okay, I have to be very careful what I say too. I got to be cautious what I say too. I live in Ontario, and there's a lot of laws regarding financials over here and things like that. So I have to also be very careful with what I say over here. So I'm just going to say a disclaimer. I'm not a financial advisor, guys. I'm just some random person who just talks about the markets, and I'm here to entertain and educate you guys. But I always stress risk management as the most important thing in the markets, and I also stress education. So if YouTube wants to shut me down for educating, I don't give a shit because I always have the Zoom that I go to and I have you guys. So if YouTube wants to give me strikes and this and that because I'm educating the public on finance, which I believe that we should be doing, they don't teach us this in school. I went to university, I went for finance and economics. No one taught me how to trade the markets and make money in the markets. I worked in a financial institution. They didn't teach me really how to scalp the markets or or do this on my own. They taught me how to make money for the banks and their investors and their shareholders and all of that shit. So I'm happy to not be there. I'm very happy to do this for myself, and I'm very, very happy to teach you guys how to do this as well. So if YouTube wants to shut me down, it's not going to stop me from educating. I'll just have to educate on a different platform, okay? So that's for YouTube, because I'm getting sick and tired of the bullshit with YouTube as well. And it's starting to really piss me off lately that they don't allow anyone to speak their opinion or bias on finance, but you can speak your opinion and bias on anything else. But as soon as you start talking about finance, that's it. That's where they draw the line. So if not, we always have our backup Zoom with you guys there. Okay, guys. So that's not what I want to talk about today. But we got to continue moving. So tomorrow, Friday, guys, this is traditionally, and I'm going to say for some traders, it is a very difficult day. Fridays are very difficult psychologically, and I don't know what it is. I'm trying to figure it out. I'm trying to learn as much as I can with the snipers and figure out why Fridays generally are tough days for retail traders. I'm thinking myself, like when I was having difficulty with Fridays, I think it was because it was getting ready for the weekend. I wanted to make some extra cash to get into the weekend, and then I was doing some silly things, and then I got caught up, and then when I went into drawdown on Friday, I started to see my weekly profits dwindling away, and what I wanted to do was make back that money that I just lost. And then I'm trading on, like, I'm not being disciplined. I'm trading. I'm reacting to the bad trade I took. I could be revenge trading. I could be hedging positions, and then it creates a disaster that you could have controlled from the beginning. So I don't know what it is. I think the weekend has to do with it. I think the Friday. And generally, the markets, the way how they trade and they close for the weekend, and then that could also affect everything. So just stress importance on a Friday. Lower your risk if you are struggling on Fridays, but there is some traders that are really, really good traders, and they do really well on Friday. So I'm not trying to discourage you guys either. I'm just trying to help improve the traders who are struggling on Fridays. But for you guys, some of you guys say Friday is my best day trading, and I love it. But then just continue doing what you're doing, but step up your discipline a little bit more. When you hit those daily goals on a Friday, get out of the markets. Get out of the markets ASAP, because the longer you stay in the markets, you'll probably give back. It's kind of like a casino. You know, if you're playing at the poker table, if you start being the bully and the chip leader at the table, you're going to start playing hands that you normally don't play because you're a bully there. You got the chips, and then you might start giving back away your stack, and over time then you might play on tilt because you gave back a lot. So the markets are the same type of analogy. If any of you guys play poker or anything like that, and you guys understand the psychology of poker, it might help you guys with the psychology of trading as well. Okay, so tomorrow, just trade careful on Friday. We have some U.S. news, this core PCE price index coming out at 8:30. Be careful with this. This is our North American news, and then we go into Wall Street. Okay, earnings real quick. What did we have today? We had a few in the pre-market, but more after hours was Costco today. Right over here at 4:15. Did anybody pay attention to Costco? So they did beat their earnings per share by 10 cents from $5.05 to $5.15. They had a disappointing revenue. They didn't beat. So 79.82 came in 79.70. Another it was kind of wishy-washy with Costco because they did beat EPS, but their revenue was disappointing. And also they also talked about their subscriptions are going down lately, so that's not good. If you hear subscriptions are going down, like in Netflix too, when they're reporting, if they say that subscriptions are going down, that's not good, because that's how they make all their money, is through subscriptions. Same with Costco, like they have the subscription-based model. When they're starting to see those decline, it's kind of like a red flag. And Costco is trading at some very high highs right now. So with this news, I don't know if you're an options trader. maybe start to look at the options trading for puts. Puts are shorting a corporation, and look for the weeklies. If you like fast pace expiring every Friday, you can look for next Friday or tomorrow if you want some cheap ones that you can scalp tomorrow. Or you look at your monthly options if you're looking to short Costco, if you're looking to continue to buy, and look for strike prices above what it's trading at in the calls. Okay, and we're going to get more into some options education. I'm excited about that, to do some other things around here. And Discord, guys, we gave out a few signals. This was XAU USD to look for buys this morning. It came out at 10.10. So you can see we had Wall Street, we had Powell, we had the GDP, and then now a signal came out, and it was to look for a buy above 26.65. And then you can see how kind of it started to play out here. So 26.65 here, we've seen the volume go down. Here's 10. See the volume come right back up, and there's the closing bar. And then when pullbacks 50% into the green bar, start to see it come out of there. So anywhere, if you buy anywhere above 26.65, above where the volume closed, the trade idea started to move all the way up to 26.65. That's a $10 move on gold. That's 100 pips. Your daily goal could be met and you're done. But if you missed it, that's what we tried to stress all week. If you miss out on a move, these are static areas. Static. We talked about that all week as well. If you missed this, this is why I want you guys join us on a daily basis, because then I can continue going more and more advanced with you guys. But if I have to keep repeating myself on what a pullback is, what a static zone is, what 50% represents, what a wick is, and things like that, then it kind of gets it keeps us from even moving further. Okay, so I need you guys to be on the same page with me as much as you can. So, and then for those that are understanding it, you guys understand exactly what I'm talking about, then we can take it the next step. We can go a little bit further. Okay, do you guys understand what I mean by that? So when you know exactly like what I'm talking about, then we can move forward. Like when I'm watching a football game, I'm gonna watch in another hour, I'm gonna watch the Cowboys play the Giants, right? I don't know who's the analyst tonight. It might be Tom Brady. It used to be Tony Romo and things like that. They got Joe Buck in there, and they're breaking down the game play by play. Like so. But they might be using some analogies that for some people that don't watch football, they have no idea what they're talking about. I understand what they're talking about because I've watched American football all my life. So like if they're saying some terms or something like that, I understand what they're saying. So if I'm saying some terms in trading, then maybe you guys might not understand what I'm saying. But for you guys that are tuned in on a daily basis, you guys will understand what I'm talking about. Okay, and then look at the pullback. It came back down red. So if you didn't do anything and you didn't take out 100 pips out of the market, look at what the market does. Like the market will come right back down to where you entered at your break even. But then what happened down there? It closed. Look at the next bar, how it opened. Ignited bullish and tap into 50%, close back again above, and the volume closing above 26.65 again. You could have got maybe another entry around 26.67, and then it came and took out the high again. So it was another runner. Like just knowing your psychological zones, knowing your higher time frame areas of control, knowing your point of interest. That's why doing a thorough top-down analysis is the most important thing you can do in trading. Take 20 minutes, 10, 15, 20 minutes at the start of your day and do a thorough top-down analysis. That's if you're going to clean up your chart every single day. But what I highly recommend is you do a good weekend forecast on the higher time frames, like a Sunday, whatever it is, Sunday morning. Get in there 3 of your favorite securities and do a nice thorough analysis, and you can keep that as a base for your entire week. And just watch those levels, watch the volume on your time frame, how it bounces in those levels, how it reacts in those levels. Will it close above? Will it close below those levels? Will that area now that was demand will turn into a red zone of supply, and just vice versa and things like that. You can keep one chart all week, but stress the importance of a top-down analysis. It's laying down the blueprint for your success, guys. If it all starts with a proper top-down, because if you just jump in the markets and you're excited and you want to trade and you just jump in the 15-minute candle candles and 5-minute candles, yeah, you can look for some trades. Okay, there's no one disputing that. There can be trade. I can jump in the market right now and look for a trade, but I don't have any context what I'm trading. I don't know where the levels are. I don't know where there's hourly resistance. I don't know where there's hourly support. I don't know where the daily point of interest is. I have no idea. I'm just kind of guessing. So trading is not guessing. Trading is understanding exactly what you're doing and doing this every single day. It's going to become very repetitive for some of you guys. That's what a daily routine is. Okay, at some point you guys will be doing this with your eyes closed. I'm telling you the honest God truth. It's going to be so repetitive. It's going to become part of your daily routine. It's like breathing. You're just going to do it. You know, you're going to know exactly what to do. Boom, 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 and you're going to know exactly what you're looking for. And then this will make cutting losses easier, because if you see that what you expect is not kind of playing out, then it should be raising some red flags and say, okay, I'm normally this setup works 70-80% of the time, and right now it's not working out. So then maybe this is telling you to cut this trade. And you know, check your ego at the door and cut a trade even before it hits your stop loss. Sometimes that is risk. That's managing your risk. And if you see that something is not developing the way you want it, it's okay to cut the trade. It's okay. You know, you'll live to see another trade. Don't force things. If it's not working out, exit the trade and reanalyze. And be a little bit more patient, and maybe you'll see a better setup. Okay. And we also had, I just want to share one real quick index right here. This was kind of like a double bottom on Nasdaq this morning. So it came out at 1140. See what I was saying? There is some good trades setups after all of the news. You know, like next week we're going to be doing post New York, 11 a.m. Eastern. So that's when everything settles down in Wall Street, and that's when there's good volume as well to trade. Okay, so this was one right here. What we were looking for right here at 20,068. So number one, here's the line, 20,068. So we see the red, the sellers. This is when Powell started speaking. This is when the market sold all the way down, but then it came right back up bullish and closed above 20,068, this level we're looking for. It did come back down to retest right here, not there. And then there was, again, the bar that finally closed around noon. And there's our confirmation. If you took that, that's 100 pips. From 20,068 to 168, sorry, the second leg was 100 pips. This is approximately 75, where it came up there. And then if you don't do anything, it came right back down to the point of interest, 20,068, kind of consolidated again around here. But then red volume closed down. Again, it came down, but the buyers responded and brought it right back up and closed it again strong at that 20,068. So that's that static level that you can play this out the entire day. Once you establish a key, critical point of control, point of interest, a static level, and it's from a higher time frame, you can bounce volume off of this throughout the day. But you got to be patient. You got to be disciplined. You also have to analyze what they're doing. So it's not just if volume closes above, that doesn't mean you just close your eyes and hit the buy button and hope for the best. No, you got to watch what they're doing. Like I watch bar by bar. I watch every single candle open and close. I watch wicks. I watch what they do. I watch rejections. I look for clue candles. All of these things that we've talked about this week. That's why it's got to become very automatic, and you got to understand what you're doing. Okay. Everyone can do this in other things in life. Everyone is very automatic and has a daily routine in every other thing that they do in life. You know, like when you get up every morning, you have a daily routine. I'm sure a lot of you guys do have a daily routine. You get up, you whatever it is, you wash your face, you brush your teeth, you take a shower, you make a coffee, you stretch, and you go on your day. You have a daily routine, and if you don't do it every single day, it will throw you off. So trading, you have to have a routine every single day. And then if you know that something you didn't do, then you know something is wrong with you. With something can happen, and so just keep everything repetitive, and you'll achieve more success that way down the road. And then again, closes above. And Nasdaq gives you that entry again. So if you missed the first one, don't get discouraged. Relax. Be patient, okay? You know who makes money in the markets? The patient. You know who gives the patient traders all the money is the impatient traders, okay? So let that sink in as well. That was Warren Buffett's quote. These markets is just a platform to transfer wealth, liquidity, money into the pockets of patient traders or investors. Okay, the impatient are the ones that are giving all that money. Okay, so from time to time we were impatient traders and we were acting on no rules, and we were the ones, all the money we were losing. Think about this, guys, like this is going to really hit home. You know how much money I've lost. I've lost thousands of dollars. You've probably lost thousands of dollars too. But you know who we gave that money to? Someone waiting, who was patiently waiting on the other end to collect that money from us. Ooh, when someone told me that, I really got pissed off. I said, that's enough of this shit. I'm going to do my very best to stop giving my money away to someone who's just not maybe a better trader than me, just more patient. So then when I heard that, I'm like, I can become more patient than that guy. Test me. Let's see who is more patient in the markets, who wants to get paid, who wants to eat more. Are you kidding me? When you're struggling and you're hungry and you're hustling, and that's all it is who's patient and who's hungrier. I guarantee you, all of us, we can outsmart a lot of other traders. Okay, so let's focus on discipline, patience. If you miss on a play, okay, it's normal. We've been telling you this from day one. Here's the pullback, but watch what's happening here. And then when you start to see the big clue, that big engulfing candle close near the high, and you get an ignited bar again right at this area, it's go time. Don't be scared to take a trade. Remember, fear and greed. And then when it comes up, this is the greediness. If you get a nice scalp for 7,500 pips, start to eat, start to trail it, start to get a little bit out of it, because if it pulls back, you don't win anything. Then you can, again, get another entry, and you could be done for the day just from this nice level of 20,068, just by knowing that level. Okay, so guys, we really got to get going. Holy, Ron is terrible with time management. Let's get into Yahoo Finance real quick. So today's news: S&P 500 clinches fresh record as chip stocks gain. Okay, so that was with yesterday's report with Micron. Nvidia took a little bit of a hit. Same with MC, but recovered in the later afternoon. So we'll see how everything settles tomorrow, Friday. Costco had their earnings, but not the greatest with subscriptions, and they missed their revenue. If you guys trade Trump Media Technology Group right over here, it's down a little bit. Okay, so any other news? We're not going to waste too much time on the news. Guys, I pinned at the top of the channel. There is a free Telegram group for you guys. I don't know if you guys can see it right here. Here it is. This is a free Telegram for all of you guys. It's pinned at the top. You can see like a little trade with a 0.1 and going from 62 to 74. That's a $12 move, 120 pips, and just with a little one can make 126 bucks. So this is everything we do at SST. Gives you our schedule, our trade ideas that we send out on a daily basis, members, what they're doing, and all kinds of stuff here, guys. That's a free Telegram group. It's pinned at the top of the YouTube. Okay. Let's get into what we're all here for. We're here for Nasdaq. Okay, Noor picked Nasdaq in the group this week, which was a fantastic pick. This thing played out really well. Now when we review it, how did things play out? Like, Noor, how did things play out? Remember when I was telling you tomorrow, like, markets are moving to the all-time highs, up to maybe approaching this big red box, and remember who I said could spoil the party? Powell. How everything is engineered. Like, when we go into lower time frames, we're going to see exactly at 9:20 when everything started tumbling down. So I knew this all week. We planned this all week from Monday when we started to do our analysis. You know, so this is what I mean, guys. Now, this is where you got to dissect everything. Tomorrow is not, well, the week's not done, so we still got work to do. We got to wait for tomorrow's close. But you can see how Monday, Tuesday started to move the markets. Wednesday, what happened in Wednesday? That's kind of the inside day, inside bar. It could dictate how the week moves. Here was Wednesday. Look at guys. Here it is. Here it is. You want the blueprint? Here it is. Monday. Let's find Monday right here. Monday. Okay. Consolidation inside. What did they do? Tuesday. Tuesday started to break out and close above with some 4-hour volume. And clue. Tuesday, they came back down red all the way, 50% in our daily point of interest support, yellow line. Our weekly point of interest is down here. Respected from last week, Friday, all respecting here. A lot of pending buyers, and it came back up and closed strong. Now we again just consolidate. The sellers bring it right back down Tuesday evening, and then we move into Wednesday. And Wednesday is the day that could consolidate the week. It could continue a trend, or it could reverse a trend. Wednesday this week was very powerful. Look at it on the 4-hour candles. We kept pushing up, making higher lows. Here was a beautiful close above structure over here, 4-hour structure, and then we continued our breakout. Look at these 4-hour big body bullish candles, not even coming back down to 50%. And look at the high. Okay, remember this big red box? Look at where I was. Remember, we did this at the beginning of the week and I never changed this, okay? So go back and watch the videos if you guys don't believe me. This area, the bottom of the red box, 20,365, and today's top wick was 352. I was off by 10, 15 points from tapping into that big red box, okay? And then look at how this big 4-hour candle washed out everything that happened pretty much on Wednesday. So these are 4-hour candles. So that's 1, 4, 8, 12. That's kind of like 16 hours of trading and one big red candle. It was basically when Powell started to speak and Wall Street market open came all the way back down. But we got two solid nice wicks right at here at our white line. Okay, so what is our white line? It's our 4-hour point of interest support. So it came down here, little bit of a dip, and bounced right back and closed. Came back down red again and came right back up. So structure is being built again at our green box, and I'll explain where we got that green box and what it is. And we came back up the remaining of the day, but if I look at the size of this big red candle, open, close, 50% of it is kind of right around in here where we just tapped right now, and it just got rejected and coming down. So I would still give a little bit of the benefit of the doubt that the sellers are strong right now, but we're coming where all the buyers are waiting in here. Okay, so it could come back down, start to develop, and we go back up tomorrow. Okay, if we can get green volume on the 4-hour to close above this daily point of interest, that's a resistance point. And this area is, if you want to mark this on your charts, 20,230. If we can get some good 4-hour volume to continue to close back above here, we could easily come back up here to these highs. Okay. So let's just see what's going on. And then we could also get some inside consolidation from the yellow line to where we are right now. So if the markets are just choppy like this tomorrow, we could be just trading in here, come down red, go back up green, come back down red, go back up green, and then we close Friday out like that. And then we see next week, are we going to get that bullish breakout again to these all-time highs, or are they going to take it down next leg, coming back down into this green box? Okay. Do you guys remember also? Okay. Remember all of these pending order lines? Okay. First of all, before I go to lower time frame, does anybody have any questions about this big bullish move this week? What caused that? Why there was this big red candle today? I'm going to explain that as we go into lower time frames. But you guys got pretty much a good understanding. Again, so if you just joined us tonight and you weren't with us all week, you probably have no idea what I'm talking about here. You're probably wondering, where did this guy get all these lines? Where did he get all these boxes? What's this guy talking about? So that's why I ask you guys if you can come in here on a daily basis, and you'll understand exactly what we're doing. Okay. Three pause, agreed. You have to burn this stuff into your brain. Absolutely. Yeah, you got to burn it in your brain and get to know exactly what's going on. Body bag, what's going on? Welcome. Zero limits. These are gems. People listen up. Yes, anything to do with real facts, it's real, guys. Like I'm not BSing you guys on anything. I'll tell you guys everything that I know about these markets. And everything that I learned as a trader, every mistake I made in the book and how I overcame it, it's we've all been there. I don't know what we're hiding. Let's just talk the truth, okay? So what now? Where did all this happen? Okay, so remember. Okay, let me just refresh your minds yesterday. Do you guys remember there was I can't remember who it was on the call yesterday that asked for the fair value. Heath, I believe it was Heath, asked Ron, "What's a fair value gap? Can you explain it?" And I said, there's right now when we were looking at the 5-minute candles, there was a fair value box that was developed, and I just explained it after the call to watch this. Look at what happened. Do you guys remember this from last night? Remember when the 5 minutes were breaking out of here, and then I said, guys, at this green candle, okay, remember the market was kind of up here. You have the end of the call 8:30, and I said, guys, look at that wick, make that box, and then that green line inside there. You guys remember that from yesterday? Those were those pending orders, I said. So this is, see the pullback now we can look back and how it reacted in this area, okay? But this was done live with you guys last night, okay? Now, see how it came down? Red, all the way down, closed at the absolute bottom. Clue? That is a clue, okay? So just common sense, how, when it closes at the bottom, this candle should have opened red with all of this momentum and just dropped all the way down to basically this little gap right in here, this green line area, right? Just common sense. That's how the market should move. But it didn't. Why? Because the algorithms and things like that did not allow common sense to happen. So this is the clue. It's an ignited green candle. Look, ignited green. It gapped down, and that's it. There was not even a flash of red, nothing. And it came up green. So when this red candle was coming down, it triggered these pending orders here. 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 And it even triggered these pending orders at the close, okay? So all of these, listen, please guys, if you can pay attention right now, okay? Because now we're going to cook up a little bit of sauce, okay? Ron's going to tell you a secret for spaghetti sauce right now. Remember, let me show it to you like this. Hey, look at what we can do here, okay? Look at this, guys. Wow, okay? This is nice. What's this guy doing? What is he showing us? Okay, remember, what was this? Okay, let's educate ourselves. You guys teach me. Okay, I need a refresher on this. What is this? What's going on here? Come on, someone help me out here. I'm just killing this Gatorade Zero right now. I apologize, guys, but I got the pasties. I smoked a big joint just right before this call, and that's just real facts. Okay, so I maybe need another Gatorade right now. Okay, anyways, right here. Guys, anyone want to help me out? Why are you guys so quiet when it comes to this? 3 puns, DJ, bands, Nels, fair value gap. Okay, perfect. Fair value gap. Are we cool on that? Everyone knows what a fair value gap is. Whatever you want to call it, okay? Call it, okay? As long as you know what's going on in here. I like to talk about the behind the scenes, okay? Not so much the name. I don't give a shit about what you call this. You can call this a Mickey Mouse box. I don't care. I want you guys to know what's going on in here. That's more important, okay? The footprint, what's going on with these orders, okay? So when it was pushing up, this candle, green, the previous candle came that high, then it went back down. So there was sell orders right there that pushed it down and closed right there. And now look at the gap. They skipped a few orders to gap it up, and it filled the previous high and made a new higher high and closed relatively close to the high wick. I would say about 90% to the high, okay? And the next candle pulled back. It came down, red, 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 and stopped right there, higher low, and went right back up and created a new high, okay? So look at I love that word, Sammy, my man, inefficiency. I love it, okay? That's a sexy word. Inefficiency. I love it. So markets need to, Sammy, my man, thank you. Markets need to be efficient for transactions. They need that flow. They need that order flow, just boom, 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 boom. They don't want inefficiency in the market, because if there's inefficiency in the market, they're not making money, right? They need an efficient market flowing, and it allows for more and more and more transactions. It allows for more volume, more order flow, bigger moves for whoever's accumulating. Okay, so we're cooking, guys. That was I love it, guys. Be more interactive. It really helps me out. And then I can really break things down for you guys. Okay, inside here. So sellers were selling, sell, sell, sell. But look at all of these buyers in here. Like, you know, what if they missed out? What if their order didn't get filled on that big green candle? Maybe their orders didn't get filled. Or when it closed near the high, they started to place pending orders here and here and here, waiting to get filled down there. But the market missed them right there. You see where that wick came down? It stopped right there. And from that previous high wick, all of this body of this volume in here, it's pending. You know, there probably missed a lot of buyers who want to get in at this price. They don't want to get in up here at the high. They don't want to buy the highs. They want to buy a nice discounted area where there's a nice fair value. Okay, you guys said it. Now, let's let this trade play out. So it continued to push up, made that higher high when at 8:35 p.m. I think we finished the call at 9 o'clock. So we saw all of this red candles coming down. So it came down red. And you see what I told you guys? When you figure out a zone, stretch it into the future, because it might act as a static zone later on, which it did. And it came down red, red, red. So this candle, as soon as it closed below, we know that they came down here and triggered all these pending orders here, these ones here, these ones here, these ones here. So now all of these buyers that wanted to get filled over here exactly at 8:05 when the futures market opened up, they got filled almost an hour later at 8:50. Okay, do you guys understand that? Okay, very simple. They did not get filled over here, and they got filled right here. Does that make sense? Let me know if this is confusing you. We got about 35 more minutes to go on this call, and I need you guys to know what I mean by this. Okay? Are we good? Okay. They did not get filled over here, so now they got filled. So we assume those were pending buys, correct? They wanted to pending buyers over here. That's why there are these green lines, and they got filled right here. Okay. Now the candle closed really bearish. So when that happens, what I do is I flip the zone from green to red, right? That's just, I don't know, it's just force of habit what I do. So what I would be doing is when it closes red like that, I would be looking to potentially sell the market with this big push down. But I'm looking for, okay, where it closed, number one. Remember, I have a routine that I look at on every single candle, and it's automatic. I look at where it closes. Was there a wick? No wick? How big is the wick? All of these things can play out, okay? So number one, the body of the candle closed right at the low. Sellers were in full, complete control of this 5-minute candle. There was no, like, a drop, and then buyers brought it right back up. Nothing. That's why there's no wick, okay? Closed 100% at the low. Common sense tells me that this candle should have opened red with that momentum and pushed down a little bit further. If this candle opened like ignited red and started pushing down, I'm going to say 90% of the time I would have looked for a sell and placed my stop loss at 50% of this red volume, and I would have looked to take a red candle, come down red, 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 and just tap into this little gap between these two candles right here, and that would have been a quick little sell scalp just to come down there. And I'll show you guys, like, just to show you on Nasdaq, that's just a 5 pip move. Okay, so not too significant, because this is the Tokyo session. There's not a lot of volume. If this was kind of like a New York setup, same setup in New York, this zone would probably be maybe 10 pips, 12, 15, because there's more volume in the market and more to fill. Okay, but don't worry about the pips. Just understand the setups right now. Okay, but this was a clue. This was a clue that the sellers are not in control. The buyers bought it right away. They were asking to buy as soon as this candle opened. There was no flash red and it opened green, ignited, and just started coming up green. So right there at the bottom of this red box, that's where I look for a wick. Sellers to reject it and push back down, then that's where again I would go with a sell if they rejected this point of the box. I would also look at exactly half of the box right there at that green line. If the buyers came up green right there at 20,108, I would have looked for the sellers to absorb them and push this candle back down and absorb these buyers and exhaust them and then push down. Then I would have looked for the sell. But this candle kept coming up because it got filled with those pending green buys, and more buyers are now buying down here, and they bought it right back up where it came all the way up here. And look at where it closed. It closed above the box again. Green volume closed above. You got to flip the box back to green. Okay. Next candle, they gapped it down, came back up. It's a lower high. They pushed it right back down. Red. But look at now the depth of market. You see how it came to this green line? It didn't come down to this green line. It didn't come down to the bottom of the ignited candle. Is this starting to make a little bit of sense to you guys? No one will teach you this shit. I'm being honest, guys. I'm being brutally honest with you guys. I learned this myself by watching 1-minute candles for the majority of my life. And I'm telling you how everything moves on a specific tick, on a specific time of day. Everything is orchestrated, okay? Just dial in. Be focused, guys. If you have to, smoke some weed. You'll get really focused. Look at it. It came down there. Higher low tick. Came back up right there. It pushed back where it opened and closed right there. Okay, so we still are picking up pending orders. When this is happening, more pending orders are coming in the market because they see that it's holding the zone. So there's more buyers than there is sellers. That's that delta volume we always talk about. There's net positive delta. These transactions in here are leaning towards buy side liquidity. Okay, and see how it closed above, and then look at how it came down. Again, red. Look at where it came down to. Our first green line. These were those ticks we did last night. Please watch the call last night if you have no idea what I'm talking about. Okay, you see how I equally staggered them? And they're showing exactly the lows of every single candle. Okay, and it came back up, made a high, and closed spin top. And then they gapped it up and pushed it for a new high up there and came right back down. But look now. Now we get a double kind of bottom. This is your first bottom, respected, the buyers. Sellers, again, this is consolidation now. This is where you get some shitty price action. You got red, green, red, green, red, green, but still majority of the volume is closing in our green zone. Look, this was a big red candle that came down red, but then the buyers bid it right back up and closed it in the green box. This was a red candle that came down red, higher low. Buyers brought it right back up and closed it above the green box. One more flush out. This was one more attempt that the sellers, like this could have been a drop in the market. But you see how the green team won here? The red team, this one, came back down red. And look, they closed it below these bars right there and dropped it. Next bar came red, higher low, came with green, good volume, again closing inside the box. Then we open ignited and we push our way out of here. Now when we're looking for confirmation candles, everyone says, Ron, what candle should I have bought? You could have kind of bought any one of these candles, but at least place your stop loss below previous structure or in a higher time frame area of support down here. It depends on your trading style. But look here how there was kind of like this red leg coming down was our first one that hit the green box. We came back up. There's the neckline. See the body and the body. It was from my previous red line of 50% of that bullish candle, and you see how that red line kind of played out, and then we came right back down in here. Nothing really materialized down in here. There's again the double bottom. Sorry, I'll change the color so we can see this. So I hope now this is giving you more context into understanding what a double bottom is. You see how the buyers kept accumulating and accumulating? It took a while, but you see how they all accumulated in around this zone where all these pending orders were waiting. It took a while for them, but they really accumulated it and they didn't let the sellers break it down. So if you were trying to sell down here, you got to know that you're selling into pending buy orders that haven't been activated on an uptrend. It's not easy to do that. Now over here, okay, here's our neckline. You know, like when I'm doing red box, green box with you guys, would this not be a red box right there? Right there. You see how it's red, and then again, impulse green candle. It didn't close up there. It closed right here. Then they pushed it right back down. Look at now our green bar. Our green bar closed above. Flip your neckline red to green if you're just looking for some scalp zones, and then look at your pullback. What is 50% of this big bull? This was the first bullish candle that closed above this zone, right? So first thing that should be going through your head is it closed above. I should be looking for maybe a pullback to enter on a confirmation. Where's 50% of the candle? It opened, it closed right there. Half of it is right there, exactly where that wick came down to, right there. Half of that volume is right there, half of it. See, this candle opened red, tapped into half of the volume, the psychological 50%, and the buyers brought it right back up and broke. You could have, you know, hypothetically took a buy right there. Where would you have placed your stop loss? Well, you can see exactly the structure that was being formed. If you want to be have a safe stop loss below this ignited body, they held it there, they held it there. That would be safe to put it down there. If you want to understand what's going on in the green box, maybe you want to place it 50% of the green box, because you see we're building out of here. If you want to be really look for minimal to no drawdown, that's sometimes how I scalp, is if you nail that candle, I could be just right below 50% of that body candle, and I'm just looking to take it for a few bars up. Like I'm looking to take out this high, the previous high, and I was off the call with you guys. I didn't do any analysis up here to see where it could possibly go. But number one, I would be targeting this high and a break. So traditionally, like this candle and that candle, maybe I would have pipped and dipped, grabbed a few pips on this security, and I'm just hypothetically showing you just to break there about 15 pips. Okay, and then right away when it's starting to move up, you could take your stop loss and go to break even. You got a risk-free trade. Okay, it pulled back. Did it hit your stop loss? No, or break even. It kept running. Okay, again, fair values. See this big body candle that closed above, and we had that ignited push. See the pullback wick right here, and that wick, same thing. Let me just get rid of these green boxes because I know it's confusing. But you see when this becomes automatic, you're going to start to learn how to do this. It's not going to work out every single time, but from right there to that next wick, green box, right? And when you figure something out, don't stop. Bring it to the future. See, it pulled back, red. It came and tapped the top of the red box, or the green box, and continue push up. If I stop there, like I want to get myself ready if it ever comes back down in there. When did it come back down in there? There it is. There's where it kind of started at 1050, and then again the next push down. Okay, but let me just get rid of that. Okay, and then look at how it kept running. Okay, so see how it kept running? Look at it. Look at it, like it all developed right here. Remember this box yesterday that we did? Okay, we did this together. And you see how, yeah, it kind of got a little bit, there was a wick, but again, wait for the body to close. That one closed below, but then the next candle gave you that clue. That's why it's very important to dial in and watch your candles, how they open and close. You'll get so many clues, it's going to be unbelievable. You're going to say, Ron, I get this. It's really easy. And then we started to break out, pull back. Okay, where did it pull back into? Very easy, guys. Look at this. Those two wicks are the resistance to the bodies. There's your zone. like this should be coming very, very automatic. Bring it into the right. If the volume is above, you make it green. Okay, there's the volume that closed above there. There's your pullback. One more time, they came in. Okay, do you need me to show you again? There's green buyers pending right here. There's buyers pending right here. There's buyers pending right here. And in fact, there was buyers pending right at those kind of equal bottom lows. So this candle was red, red. When it was coming down here, it was activating pending buys, pending buys, pending buys, pending buys. Once all those pending buys got filled, look at the volume, how the buyers increased it and came right back up and closed it right above there. And that started this next leg that broke for highs. Selling pressure pushed it down, pushed it down. It came back down. Buyers stepped in again, higher low, and continued to push this thing. And then there you get your big body candles at 11:30. A new 30-minute candle exploded. And it just did not allow Nasdaq to come down last night. And then when look at how it kept driving, and holy shit, this was ridiculous, guys. Noor, I hope you had a trailing stop loss on this pig of a trade, but look at this thing. It continued to run, pull back, continue to go, pull back, and then when did it start to break down? 9:15, 9:20. This is Powell. Okay, it doesn't get any more engineered than this. It's actually pretty laughable, to tell you the truth. Look at the divergence. Look at, like, I just want to explain RSI, okay, because I know a lot of you guys use this indicator. And look at where you would have got ruined. Look at right here. Okay, number one on our call here. It was out of control, the RSI. Okay, it was up here. 82, 83. But all it did was just pull back into that fair value box that we figured out, and then it kept moving out of there. Again, right here, it was overbought, 83. Okay, look at the pullback. Was just that spin top in that red candle. That's it for that overbought. If you kept stacking sells, you're ruined. Your account is ruined. Again, if you put sells again right there, all you got was that red candle and that push down. Okay, stop counter trading when you don't know what you're doing. Stop this. This is unnecessary. Okay, unless you know and you have a determined and you're a very disciplined trader and you know the concept of pipping and dipping. That's an analogy that we created here at SST. Pip and dip. Grab your pips and dip out of this market and keep trading with the trend. If not, you're going to get ruined. And then you're going to keep stacking sells because your RSI indicator is telling you it's getting out of control, and you and the rest of the population that uses RSIs keep stacking, and you're getting squeezed and you're getting squeezed and you're getting squeezed like a lemon, and you've lost all your daily gains, you've lost all your weekly profits, and you're pissed off and you're angry. And when I look at this and I have a simple conversation with you, I'm like, why are you angry? Like, just look at what you were doing. Look at your trading. You were just doing everything opposite that you should be doing. Why are you mad? And you kept compounding the problem by adding more and more and more sells because RSI is telling you to sell. If you didn't even use RSI, I don't think you would have been looking for sells. Like, no structure. I don't see any red bars breaking below any critical structure. Nothing. They're just small little pullbacks, and the buyers are waiting to continue to buy that. Okay, so now we continue to move. There's clear divergence. Like, it doesn't get any more obvious. Okay, so I know a lot of you guys are divergent traders. Okay, from that peak to right when Powell started. Okay, it is making, look at the price action keeps making higher highs, and then if you do look at your RSI indicator, this is what bearish divergence is just from that peak to the RSI peak of 94, 95. Have you seen a 5-minute RSI get to 95? And look at how the strength is going down. Okay, that's a massive bearish divergence. Okay, do you guys understand what bearish divergence is? The price action is making these higher highs, but the strength is decreasing. Okay, you can see how it's sloping down and the price is sloping up. They're mixed. It makes you question, how does the price keep going up when the strength is going down? Okay, that is foreshadowing that the market is potentially going to break down in the opposite direction. And when did it break down? exactly to the minute of when Mr. Powell was speaking. So we talked about this yesterday. As soon as this gentleman comes there, he could have came there at 9:20 and didn't even have to open his mouth. He could have just sat there for 5 minutes and the market would have reacted, and it probably would have done the same shit what it just did here without even him even opening his mouth. Okay, because these markets are all engineered for this type of moves. Why was he speaking 10 minutes before the Wall Street market open? Tell me that. Like, who chose this time? Okay, so just ask questions. What's going on? What's going on? And then just look. 9:20, bearish igniting candle, come down. Low wick, another bearish ignited candle. If you figured out roughly 50% of it, the next candle came up green, 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 and then they pushed it back down. No wick. There's your pop and drop. There's your support level right there. Okay, zones right there. You should have had a line right there. Okay, that was just a pivot where it came back down. Look at where they stopped it right there at 810, and it came back up. And then there's your big red bar that closed below, and then here's your retest. It came back up green, 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 right to that existing support line, turns to resistance now. It's a static line. The volume is the only thing that's variable, and it ended up continuing to push down all the way down. That was probably, I'm going to say, one of the easiest sells I've seen in the market in a long time. This thing, the way how it was engineered this entire week, guys, when you put the pieces of the puzzle together, it's going to start to make more and more sense. A lot of us here at SST kind of expected this drop as soon as Powell was speaking, just the way how Nasdaq was making these crazy highs. And as soon as he came there, he cooled the market down. Okay, do you guys understand that? His job was there to cool the market down. He did his job, and then what do we get? A beautiful double bottom bounce where, remember from the start of the week, our 4H point of interest support box right here. Okay, so this is what I watch. I watch the 5-minute candles, how they react at these zones. It came all the way down, and look, right there. They took out the liquidity. We know what's down there. What's down there? There's the money. Right below the 4-hour zone. So they came down there. They triggered all of those pending buy orders or sells limits as well. And look, it came right back up to the next zone. Hopefully, you guys changed the color of the zones. But you see, that's kind of one bounce, pull back. Again, they broke it out. Look, it came all the way back down. Red, 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 red. One more time, they closed it below there. But look at your clue of the candle. Like, they closed it below red. Did this candle open red and even take out that low? No. It just opened red a tiny bit and came back up green. They pushed it up and closed it back above there. And then we start to get that green volume. There's your double bottom at the 4 hours. Not just any traditional double bottom. It's a double bottom created at our 4H POI support zone. It came red all the way down there. One bottom. Okay, this is that was a breakout of the neckline anywhere inside here, the bigger box, that's our neckline. And then it came back down, red again. There's our double bottom, okay? And then look, there's our green candles closing above, and they consolidate. And then there's the next push. We got volume closing above these previous highs, okay? And then we continue to consolidate and go back up. Okay, and this is where we are right now. It's trading back down, right down to all those pending orders. I'm sorry for all of the lines on the chart, and it's getting confusing with all of these lines, but these zones will start to make sense. Okay, do you guys understand? If you had alerts or some type of notification system, if you're using TradingView, all you got to do is right click on this line and it will place an alarm there, and when the price action is getting down there, boom, you get an alarm. If you're looking at, I know you guys use this RSI indicator, okay, so RSI came down in the red at 15 2 times, like right here. Look, on this thing it was 15. Look at where these RSI buyers absolutely got ruined. Okay, it came down to 15. All they got was that green candle, and that's it. And then they slammed it back down. And then look at it, made the second bottom at 15 where the price dropped. So that's hidden divergence now. And started to get a little bit strength, double bottom, and then continued to break out of there. These were pretty good to scalp buys off of these zones. But that was, okay, I just want to recap. This was, what time is it? Okay, 8:19. Okay, because I want to finish up with that 10 minutes what I had written down. Okay, so this was Nasdaq. We did at the start of the week. Noor picked this in our group, and thank you for this. This was fantastic, the way how everything played out. I love it. So I want you guys to understand, we did a top-down analysis on this. We went from weekly to the daily and stopped at the 4 hours. We found our areas, and then I told you guys, you go on whatever time frame you trade. Some of you guys trade 4H, looking for swing trades. You swing trade for 4H volume off of these levels. Okay, this is our 4H chart over here. And I can keep this same chart going into next week. Yeah, I'll clean it up with all these. This was for education, all of these green lines in here to show you those pending buy orders on the 5 minutes. But I can clean all this up. I'll keep all my critical lines and just watch again how everything is moving. Maybe the 4-hour candles, here's the neckline right here at this daily, they'll come back down, maybe double bottom here, and we'll start breaking up. If we get 4-hour volume close here, we could easily come and take out this high, and we continue to drive up. If red sellers close it below here, this purple line, we could be selling back down maybe next week. Okay, the markets might cool off, and after Powell's comments and Secretary Yellen's comments, maybe the market is going to cool off a little bit. Okay, it happens. Markets cool off. They don't just go up forever. They got to cool off at some point. Okay, so any questions? First of all, Powell, 920. Do you guys understand why we told you to keep an eye on that time and be very careful? Okay, you got to know these things. They got to become automatic. News, folders, what you're trading. Okay, guys. One thing I would just before we finish, this right here, guys. So please, guys, listen to this. Okay, I just wrote this two seconds before the call. What it is for the weekend, for things to, can everyone see this? Okay. Number one, how many of you guys are journaling? You know, if you don't journal, okay, I'm not here to lecture you on to do a journal. Okay, this is, if you want to do it, that's up to you. We're all adults here. But I highly recommend that everyone does some sort of journaling of their trading. Okay, anything. You got to know exactly what's going on if you really want to take your trading to the next level. Like, do you guys want this or not? Like, some people are more hungrier than others, and they'll do everything, whatever it takes to become successful and make some money. They have no other choices in life. Like, this is what they do, you know. So it's going to come down to who wants this more. There's some people that want this more than others, and they put in the work and do this stuff, and it will benefit them in the long run. If you're half-assing it and you're not doing any journaling, and you're wondering why you're struggling, and you wonder where your mistakes, and you don't know what you're doing, this is answering your question right now. So what I would suggest, tomorrow, Friday evening, okay, I know it's Friday night and everyone wants to party. Some people like to stay in and do this stuff. Fridays, Saturday mornings, Saturday evening, Sunday morning, Sunday evening, Monday morning, whatever day works best for you with your busy life, figure out a day where you're reviewing your journal, look at your profits. Okay, some of you guys made some profitable trades. Look at those ones as well. Don't just get cocky and say, oh, I made some good trades, but go back and look at them. What did you do? Did you buy like a nice pullback in a fair value gap, and now you understand why it wicked out of there and you made a certain profit? And was there things that you could have done better? Could you have kind of maximized a little bit more profit on it? Did you take your profit too fast, or anything? This is where you can start to see and make some improvements or some adjustments in your trading. Okay, so everybody needs to make adjustments. Athletes need to make adjustments. Dak Prescott, who's going to be quarterback in about 10 minutes for the Cowboys, he needs to make some serious adjustments, because we're 1-2 right now, and we got a division game against the Giants. He better get his shit together, because they paid him $70 million a year to throw a football. So Dak, he's got a lot of pressure on him. He better get it together, or else he's going to have some angry Cowboy fans. So, sorry, getting off topic, but he needs to make the necessary adjustments. He needs to look at the game film from his critical errors that he made last week against the Ravens, and he needs to learn from it. Okay, he had a lot of missed routes with CD Lamb, where together they weren't on the same page. So they got to get it back together. And look at your setups. Okay, your setups. Your sell setups, your buy setups, were they pending orders? Were they market executions? Were they what type of setup did you trade? Did you trade a double bottom? Did you trade a double top? Did you trade a consolidated breakout? What were you doing? Were you trading with a trend? Were you counter trading? If you start to see that you were counter trading and you were selling Nasdaq and you took a lot of losses, well, right there, that's your adjustment. Stop counter trading or learn some disciplinary rules if you're counter trading the market. If not, just trade with the obvious trend and just do that. Psychologically, if you can just change that, you might just boom become successful as a trading just by doing that simple thing. Okay. Trading plan and goals. How many of you guys are utilizing a trading plan every single day? And do you guys have trading goals that you're really respecting? Not just saying, yeah, Ron, I got some trading goals. I'm being serious. How many of you guys have some real trading goals? And when you hit them, you're disciplined enough to get out of these markets and start to appreciate that you hit your daily goal in the financial markets where you're trading against institutions, corporations, and market makers, and a lot of big players. So, we're small little minnows in the big ocean here. So if you get your daily goal, get out of these markets. Okay, learn that discipline, learn it now. You'll thank me later. Perfect your trading plan. Okay, get better at that. Improve your discipline. Okay, we did a whole webinar on this. Please, guys, start to improve your discipline. Get more patient. Stop buying impulse candles. Stop selling impulse candles where you think that it's going to do this or that. Stop. Refrain from that. Trade smaller if you know it's an impulse breakout. If you know you're trading that bar before it closes. The best you can do is wait for confirmation. Okay, yes, you might miss out on an impulse trade here and there, but the majority of impulse trades will lead to losses. So you got to weigh this out. You got to understand that. Yes, you're going to miss out on some impulse trades, but if you're more patient and disciplined, you might be getting better setups with minimal to zero drawdown and going directly right into profit and start improving your trading. So you guys test it out. Okay, I had to do this for the majority of my life and figure out what would work for me, and all of these things I speak on are adjustments I have made to make me better in the markets. Risk management. I know a lot of you guys are playing games with risk management. You guys are gambling and you guys don't really have a risk management plan. You guys are probably the ones that are suffering trading. Okay, the ones with real good risk management plans, they're probably the ones that are starting to see how the markets operate and they're doing well. Yes, they're not making $1 million and they're not all driving Ferraris and Lamborghinis, but they're figuring out how to maybe make $20 a day, $50 a day, maybe $100 a day. Your goal is to replace your daily work income. So some of you guys are working 9 to 5. Some of you guys have a real job not outside of trading. And so think about this. If we can kind of have a goal to make exactly what we make at work, now you've made a supplemental income. Now it's like having two incomes. If you make $100 a day at your job where you work 8 to 10 hours a day, and we can manage to make $100 trading a day, now you've kind of just, it's overtime. It's kind of like you're making a supplemental income, and now you got two streams of revenue. You got your work income, paying your bills and everything like that, and then now you got some trading money coming in, and continue to do these if you can. Okay, you don't need to spend 6, 8, 10 hours in the markets every day. Some traders only need 1 hour, 90 minutes, 2 hours, and that's it. Boom, 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 they're done. Okay, so this is really important. Top-down analysis in your zones. Okay, so please take 5, 10, 15 minutes before you even start trading any security you trade. If you're trading Nasdaq 100, do a top-down analysis. Start with your higher time frames. Don't just look at your higher time frames, but actually zone it out, map it out. Look for your point of interest, your point of control areas. Look for weekly highs, weekly lows. Look for daily highs, daily lows. Look for consolidating areas. Figure out where your higher time frame supply is. Figure out where your higher time frame demand is, and those zones will play out amazing for you if you understand what you're doing. So take the time, top-down analysis. You'll understand the bigger picture in trading. You'll understand exactly if you're in a buy and it's coming up 200 pips and you're coming up to a weekly area of supply. You gotta understand. You gotta have some common sense to think that's where the big sellers are waiting to absorb you and drop the market down. So if you're in the buys, you gotta think: should I be closing out my trade? Should I be taking my profit? What should I I do for risk management? Should I have a trailing stop loss? Should I close out 75%, leave 20% running? Like things like that. You should have this automatically ahead of time, so you're not thinking while the market is live. Like you just know, boom, 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 everything is automatic. That's what a sniper is. A sniper is like someone who is very patient, very disciplined, shoots with precision, and understands the outcome of everything. Like research what a sniper is, and you'll figure those things out. Okay, and then that's why we are snipers in the markets. Okay, you can kill a candle on the wick, like a kill shot, if you know exactly what to look. If they're taking out the liquidity of a daily supply and it gets shot down, that's a sniper. That's like a kill shot. Then you get your clue candles. If you get that big aggressive FU candle, like Nasdaq on the daily had something developing here. Where it kind of came all the way through here and then it pushed all the way down, but the buyers came in later on to build it right back up. Because if this kind of was that big reversal, this could have been a big move coming down in the market, but the buyers are still there. They still accumulated, so that's why I think we're going to get some consolidation. Maybe we will continue to come back up here, but we'll see how everything moves. Okay. What else did I forget here? Okay, sorry, I was just talking about up here. Okay, so top-down analysis and zones. Okay, so everyone, this is what we talked about all week. Okay, our zones, and then right here, trading is a job. Okay, for most of you guys here. Treat it like a job, okay, not a casino. Stop gambling in these markets, okay? Those days are over. Stop placing a buy stop and a sell stop above and below and hope for the best and over leverage your accounts, because you're not going to survive, okay? Over time, you're not going to survive. Yes, you might gamble and have a couple good days in the markets, but over time, you will not survive, okay? You got it. In order to survive these markets, you got to have a good trading plan. You got to have goals. You got to review your trades, like how this week, how we've been reviewing Nasdaq, how it reacted at levels, and you guys are getting better understanding. This is what it takes, okay, to understand. So you can look for this type of stuff next week. Improve your discipline, risk management, top-down analysis in zones. And finally, guys, it's 8:30. I got to bounce out of here. I'm going to go watch the Cowboys-Giants game. I just want to say to everybody, thank you everyone on YouTube for joining this week. Hit the like button, guys, if you like what we do here. I like the feedback. Then I want to continue to do this stuff with you guys. Yes, that's what it is. The wick destroys, the wick does the damage, the candle tells the story. The body of the candle will tell you the story. So I love that quote. The wick does the damage or destroys, and the candle body, the actual close of the volume, will tell you the actual story, guys. So these candles tell us a story every single day. They tell us a story on the 1 minutes, they tell us a story on the 5 minutes, they tell us a long novel on the 4 hours, and they tell us a complete encyclopedia on the daily and the weekly, depending on your time frame that you trade. Okay, so I think you guys are starting to really understand the importance of what we talk here. We can talk technicals and break down candlesticks like nobody's business, but we really need to understand the psychology, because it doesn't matter how much you know about price action. If you don't understand your risk management, if you have no discipline in the market, it doesn't matter how much you know about a candle, so you got to put everything together. These are bricks for your foundation, guys. You're building your foundation, and this is, in my opinion, the best way to learn how to be a successful trader is forgetting about money. Okay, I know at the end of the day, we all trade to make money. I understand this, guys. You guys understand this too. But you gotta really know what you're doing before the money will come. Okay, because understand, if you know how to do this, yes, the money will come in the future. Okay, but don't just go into trading just to make money, because that might make everything cloudy and you don't understand what you're doing, because you're just looking at money. Okay, money is the root of evil. It could ruin you in these markets. Okay, but I don't look at it as money. I look at it as a percentage. I'm looking to get my 1% of my daily goal, or a certain amount of pips, 100 pips, whatever it is. Those are how I set my goals. I don't set them, I have to make $500 today, because that might throw me off. So I keep everything. Percentages, pips, ticks, whatever you guys do. Okay, guys, so this was a fun week. Next week, we're going to go for the next couple of weeks. We're going to do post New York sessions. That will be starting at 11 a.m. Eastern. And then we'll see how the markets are moving in post New York. Should be fun, should be exciting. It's Monday's last day of September, and then Tuesday is October 1st. So we're going to get a new month. Exciting things coming. Yes, you're liking these evening classes. Awesome. 'Cause this is why I do this. I like to take 2 weeks. 2 weeks educating in the Tokyo sessions, because it's a little bit slower. We can actually watch things, and then it's not so much as a fast-paced market, because New York is crazy, and then it's going to be really, really hard to answer all of your questions. So we don't have a lot of people on the call, so I can really, really help you guys. We can make this very interactive, but this is what we've been doing from day one. So this is what we're going to continue to do. We have Dave and Forex Borex here at SST, holding down New York sessions. We got Shahab in London. So we have other traders here with the SST, and then everyone in Discord, and hopefully we can get some more and more developing in there, and not being as shy and doing their thing and teaching. So it's a SST, it's a whole group effort over here. It's not just one individual, so it's a whole team effort here. But guys, that's it. I gotta go watch this game because everyone's waiting. Okay, so everyone, have a blessed weekend. Enjoy trading tomorrow. Okay, make it the best Friday. If you're struggling with Fridays, even if you don't take a trade tomorrow, be a spectator in the markets. Judge how you've been doing this week. If you've hit a weekly goal, maybe decrease your risk. We had a trader yesterday who hit 13% this week, not including trade. So what I would do if that was me, if I made 13% this week, I would lock in 10%, lock it in, and then maybe trade with 3%. If I lost that 3%, it's not the end of the world. I still banked 10%. So that's the way how I would do things. Judge how you're doing. Are you exceeding goals? And then you can still trade, but you're trading with a little bit of house money, some free money, and you still locked in. If you do make some mistakes, okay? But thanks, guys. I appreciate all of you guys. I hope everyone on this call learned something new this week. We really changed up a little bit of the education this week. So I hope you guys learned. Any ideas you guys have for upcoming webinars, let me know. But I kind of have a plan for all of us, what we're going to do. It's the SST Super Systems. It's going to be a shit ton of webinars on a lot of things, guys. So everyone, have a good day in the markets tomorrow. Could be a choppy day. It could be a trending day. We don't know. So just let things play out and see how everything is moving, okay? And I hope you guys are improving your trading day by day, and I hope you guys are starting to see the light at the end of the tunnel, and you guys are doing good. So everyone on YouTube, there's a free Telegram channel pinned at the top. Join us. If you want to join us at SST, this is our website, stocksnipertrading.com. Join us in these free blogs right over here. Come to more, go to blogs, and these are free blogs we give you guys on a daily basis. There's a lot of good stuff in here. Moving your stop loss to break even, we just talked about that. There's a whole article here with diagrams. What are pullbacks and why are they important? We just talked about that. Break and retest, okay, if you guys are unsure what a break and retest is. Selling at a point of control area right here. There's all kinds of things here, guys, everything. But these are just daily blogs going out on a daily basis, okay? And if you want to join the team, join us. If you're looking for education, we're the place to be here. I was talking about our beginners webinars, 1 to 10, then our next one's 11:30, and then when you get into the real juicy stuff, like zone to zone trading right here, webinar 50. What are static trading zones? We talked about that. Trading in drawdown and how to handle it. Psychology of over trading. Some of us are guilty of that, of over trading. Power of pips. There's so much. Full top down analysis, like it's teaching you how to do a proper top down analysis. What we talk about, common mistakes we all make as traders. I believe this was a 3.5-hour webinar that we were talking about common mistakes we make, how to overcome them. There's so much in here, guys. Pick a security and master it. All you need is one security for the rest of your life if you know what you're doing. Talking about dead cat bounces and bear traps. The firecracker candle that we talk about, the ignited candlestick. Don't marry a position just because you take a buy and it's not working out. That doesn't mean you're married to that position. Cut it and review the markets and change your bias. Okay. Ton of education, guys, and then I'm creating a lot more to come. Okay, but I'm out of here, guys. Have a good night, everyone. God bless, and we'll see you guys next week. Have a happy Friday. Have an amazing weekend, and we'll see you guys. Thank you, guys. Everyone on YouTube, I appreciate all of you guys. If you guys can hit the likes, show some appreciation for what we do here. We do appreciate it. Everyone on Zoom, have fun with Shahab and in New York. Be careful trading, and we'll see you guys next week. Thank you, guys. Take care, everyone. Peace. Thank you, Erica. Have a good night. Tony, take care, brother. Ignacio, thank you. I appreciate you, man. Bye, Ferdinand. Have a good day. Noor, take care. Have fun tomorrow. Kenny, my man. I always appreciate you. Thank you. Franco, you saw the tie. Gwendolyn, thank you for joining. It's nice to hear from you. Have a good night, guys.
Hey guys, good morning. Welcome to the live session of Stocks Never Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.